You know when you stretch a rubber band like as far as it can go and then you just let it snap?
Right, yeah.
For a second, it looks like it's flying forward with all this incredible self-generated momentum,
Hmm.
but it's not an engine, it's just releasing tension.
Right, the momentum it's a complete illusion. I mean, once that stored energy is spent, the object just drops right out of the air.
Exactly. Which brings us to the August 24, 2026 crypto outlook from Vantage Plus. We are looking at a sudden, explosive crypto market rally across the board today.
Yeah, we really are.
So welcome to our deep dive into the forces behind these charts. Our mission today is to unpack this report and, answer one specific question for you. Is the sudden breakout a new bull run you should buy into, or is it a trap that's about to spring shut?
Right, well, we're seeing Bitcoin and Ethereum surging alongside precious metals right now.
Okay.
And the underlying mechanics of this specific rally, they're heavily reliant on a sudden drop in the US dollar index, the DXY, which basically triggered a massive short squeeze in the derivatives market.
Okay, so we know short squeezes happen when over-leveraged derivative traders are forced to cover their positions, right? But I want to focus on the mechanism here.
Sure.
How does a weaker US dollar actually force crypto derivative traders into a corner, like mechanically?
Well, capital constantly flows toward yield and safety. So
Yeah.
when the dollar suddenly weakens,
Right.
institutional algorithms instantly reprice assets that are priced in dollars.
Right.
So gold, silver, and Bitcoin, they suddenly look much cheaper to global buyers.
Oh, I see.
Yeah. And that initial influx of algorithmic spot buying pushes the price up just enough to cross the liquidation threshold for traders who are betting against the market.
Okay, so the dollar dips, the algos buy the dip in hard assets, and suddenly the short sellers are underwater.
Exactly.
And then they're forced to buy back in to cover their losses. It just creates this automatic feedback loop of buying pressure.
Right, a feedback loop, but one that operates on borrowed time.
Yeah.
Without new purchasing power stepping into the spot market, meaning actual buyers acquiring the asset, not just traders covering their derivative exposure,
Right.
the fuel simply runs out,
Right.
and prices will fall right back to recent baseline levels.
So we need real engines, not just release tension.
Exactly.
Well, the Vantage report does highlight some analysis from Van Eck pointing to a seasonal pattern to provide that engine.
Yeah, they do.
They suggest this bear market might naturally conclude by September, meaning the short squeeze could bridge the gap until real spot buying returns. But wait, we're relying on a literal calendar to bring in billions of dollars of spot buying.
Oh, yeah, well, yeah.
That sounds like pure hopium. Like, what is the actual mechanism there?
I mean, it sounds like astrology for finance. I get it. But there is a mechanical reality to September seasonality.
Okay.
Institutional capital typically dries up during the summer months.
Yeah.
Portfolio managers go on vacation, trading desks actively reduce their risk exposure.
Right, everyone's at the beach.
Exactly. But after Labor Day, that sideline capital comes back online for fourth quarter portfolio repositioning. So it's a recurring structural influx of market liquidity.
Okay, so we're basically waiting for the institutional vacation to end.
Pretty much.
And to see if spot buyers are actually front-running that return today, we have to look at the technicals. And looking at the charts, I mean, we're seeing what looks like a massive liquidity cascade. Bitcoin is trading at 76,238, having finally broken some recent resistance.
Yeah, and Bitcoin and Ethereum are soaking up all the volume, but they're both staring down their 50-week moving average.
Yeah, Ethereum is at 2,415, and it churns mimicking Bitcoin, but facing a massive ceiling at 2,500, right, the 50 MA.
Yes. That 50-week moving average is the absolute critical benchmark for survival here. The market is treating it as an incredibly heavy ceiling. For Bitcoin, it has to hold that psychological 70,000 level and break its own 50 MA.
And if Ethereum clears 2,500...
Oh, if it clears 2,500,
yeah,
that could quickly unleash momentum toward 3,200.
Wow. Okay, but why that specific line on a chart, though? Like, why do markets care so much about a 50-week average?
Well, it represents nearly a full year of institutional cost basis.
Yeah.
So imagine all the buyers who got trapped during the market downturn over the last 50 weeks.
Oh, right.
As the price rallies back up to that historical average, those underwater investors are finally hitting their break-even point.
Oh, and they just want out.
Exactly. They sell just to get out whole. It acts as an institutional tripwire. where, trading bots and relieved humans just automatically dump their bags.
It's like a gravitational pull of historical buyers who are just desperate to exit.
Yeah.
Now, if spot buyers can chew through that trapped supply and push Ethereum through its own moving average barrier, we could see a massive wave of fresh momentum.
Mm.
But that brings us to the altcoins.
Right.
Ripple and Solana aren't just lagging behind Bitcoin and Ethereum. They are starving.
Yeah, we're really seeing the harsh reality of a derivative-driven rally here. Because during a genuine spot-driven bull run, capital flows into Bitcoin first, then trickles down into Ethereum, and eventually floods into altcoins like Solana and Ripple.
Classic wealth effect.
Exactly. But that trickle-down effect is completely broken right now. Ripple's at 1.4773, and it's hitting a brick wall at the 1.5400 resistance.
Ah, it's weekly 50 MA.
Right. And rejection there means a return to the downside. Meanwhile, Solana is at 92.90, and it's actively feeding off its own 50 MA.
So are these altcoins basically just waiting to see if Bitcoin holds the door open for them?
Pretty much. I mean, Solana needs to cross 105-point fissure to gain fresh momentum, but ultimately, altcoin success right now depends entirely on Bitcoiners' rally continuing. If Bitcoin's momentum stalls because the short squeeze ends, the altcoins simply lack the independent liquidity to break through their own resistance zones.
Wow. Okay, so the entire ecosystem is holding its breath, just hoping spot buyers replace derivative short sellers as the primary fuel.
Yep.
The squeeze provided the spark, but the spot market has to provide the actual wood for the fire. Which leaves me with one nagging thought for you to explore on your own. If this entire crypto breakout was heavily reliant on US dollar weakness and derivative mechanics, what happens to these incredibly fragile technical support levels if traditional equity markets suddenly experience a massive liquidity shock next week?
Oh, wow. Yeah.
Right. If traditional markets pull back and cash becomes king again, does our rubber band just completely snap? Something to keep an eye on.